Hi everyone, Mark here at Fortune Financial, and today I'm going to run through the mortgage and protection role play. It is the 30th of March 2023. So if you're watching this video looking to learn a role play for your kind of sign off with regards to the network, then make sure that the date is relevant. So let's crack on. Right, to start with, you're going to access initial disclosure documents through our advisor folder. You can see the bottom one here that's highlighted in blue, just clicked on. That's the residential mortgage and protection and general insurance initial disclosure document. And that's how you're going to start your presentation. Now, I'm just going to share with you the initial disclosure document. And this is going to be the first kind of communication you're going to have with any client from a compliance perspective. It ensures you kind of map out who you are, where you're from, what you're about, what you charge, and of course the overall view of working within the current network and what we can do for the customer. So when you do your role play, what I would say is the initial disclosure document, you don't have to memorize this. They're changing week in, week out, month in, month out. So read this to the customer and cover off the points. So starting with the initial disclosure document, I'm going to say to the customer, this is a document put together by the Financial Conduct Authority. The document provides information about our services, our fees, our regulatory status, and your protection and rights in respect to the service we provide. We're Fortune Financial Planning, and we're down on Bridge Street in Hitchin. We're appointed representatives of Primus Mortgage Network, who are a trading name of First Complete Limited, which is authorised and regulated by the Financial Conduct Authority, known as the FCA. Now, FCA is the independent watchdog that regulates financial services, and what they enable us to do is offer products and advice from a number of areas, such as mortgages, second charges, life insurance, health, or also known as private medical insurance, business protection, subject to certain licensing, and general insurance, once again, with the right licensing. Now, the type of services we offer is that essentially what we do, we put you, Mr. Client, in a position to make an informed decision with regards to a personal recommendation, whether that could be for a mortgage or an insurance need. And we act for you. That's really important. We don't act for the insurer or the mortgage lender. It's important we work with you to fit your needs and make the best possible recommendation. So by means of whose products we do actually offer, insurances, we offer products from a range of insurances, and they can be anything from life insurance, critical illness cover, income protection, mortgage payment protection insurance, home insurance, and also whole of life plans. And we do have another policy with one family, which is an over 50s whole of life policy that has no medical underwriting. So if anyone has significant medical issues and they're struggling to get cover, but they're above the age of 50, there's potential we can get you something with regards to that plan. When it comes to mortgages, we offer a comprehensive range of first charge and second charge mortgages and loans from across the market, but not deals that you can only obtain by going direct to the lender. Now, we have exclusive products as well. They're products that are offered through our network. So there's a chance we could get you a product that you can't go and obtain direct with a lender. Now, this is really important, of course. What do you pay us for our services? For insurances, you don't pay us anything. We receive a commission from the product provider, and the commission is calculated as a proportion of the actual premiums paid to the insurance product. When it comes to mortgages, it depends whether it's a standard or a specialist mortgage. It all depends on the work involved from an admin perspective. So we charge up to 1% of the mortgage advance with a minimum fee of 0. We don't charge in all cases. And a fee of 1% as an example on a 100,000 mortgage will be a fee of £1,000. And if it's specialist mortgage lending, then we could charge up to 2%, which again on 100,000 would mean a fee of £2,000. Fee can be charged either on application, offer, or completion for all purchase applications and remortgage applications. And the amount we charge is dependent upon the research as well as the administration I've just discussed. You'll not receive a refund if your mortgage or loan does not go ahead. So we've got a kind of an agreement with our customers. We send you a mortgage agreement to sign, that if you do proceed and we complete the works, of course, you'll still pay us for the works that we've actually gone ahead with for you. Now, we will also be paid a procuration fee from the lender, and that's for doing a job on their behalf, of course. And the amount of procuration fees disclosed on the illustration for yourself to have a look at as well. Now, if you're seeking advice for increasing borrowing on a secured property, then there's 3 ways we can do this for you. You can take a further advance from your current lender, so we'll look at that option. You can take out a brand new mortgage with a different lender for the full amount, or alternatively, we could look at a second charge option. Them rates tend to be higher than a first charge, but can also prevent you paying early redemption fees. We will not consider any unsecured lending, but just to let you know, these could be available to you, so it may be worth, expressing them avenues. Borrowing into retirement, we do not offer advice on lifetime mortgages, such as equity release, but we can put you in touch with the right people if that were the case. And also, we don't handle cash. So payments to us will be done through backed payments for our broker fees. We do not accept any cash payments as a form of payment. Any payment requested by third parties, such as the providers and the lenders, solicitors, should be done directly through those third parties, not through Fortune Financial. Of course, you've got a duty to provide full and accurate information to us. It just makes sure that the work we're doing for yourself, whether it is an insurance product or a mortgage, is going to be relevant to you and is going to do the job, not just now, but long term. Example that could be, it could invalidate your insurance in the future if you are not open and honest with regards to your personal circumstances for an insurance plan. Now, of course, we maintain procedures to prevent and manage conflicts of interest. That could be anything by means of someone who is being represented through Primus Mortgage Network, our current network, and the risk that that arise from conflicts of interest. We need to really make sure that is reduced. Confirmation that we do not consider that our normal organisational and administrative arrangements are sufficient to mitigate these risks. And also there's a little bit more about that. So if you've got any questions on the conflicts of interest, please do ask. But of course, we're here to represent you. We want to make sure we do it in the best possible way. Now, of course, in the unlikely event of a complaint, you can do that direct to Primus Mortgage Network themselves. You can do it in writing, via phone and email. The details are here. Of course, if you're not happy with the outcome of that complaint and you choose to take it further, you're covered through the Financial Ombudsman Scheme. Again, the details are available here. And for any reason we can't meet our obligations in the future, we have got the Financial Services Compensation Scheme available for you to go towards and kind of investigate to why you feel you might have been misadvised, but again, in the unlikely events. Now, we take client confidentiality really seriously, so we keep all your personal information private and confidential. And we do also do some electronic verifications of identity when it comes to mortgage lending. So that does put a small footprint on your credit file, but it does not affect your credit scores. But it just prevents us having to request additional information such as passports and driver licenses. 9 out of 10 times, the lenders these days are quite happy to do that verification in alternative ways. And then we'll come on to our customer privacy notice. Now, the customer privacy notice is all about how we handle the data. Now, why are we asking you to read this document? It's important for you to understand what we do and, of course, how you need to relay your information to us. By means of your information, it's used for, of course, putting together a personal recommendation to yourselves. Now, that could be anything from your name, employment status, address, bank account details, of course, for the likes of direct debit instructions, and any pre-existing, insurance needs such as medical conditions as well. So it's really important you're as open and honest as you can be with regards to that. And any questions with regards to moving forward with regards to your information and how we handle that, please do not hesitate to kind of come to me on that basis. How we deal with your information is, of course, it's for our purposes initially. We won't proceed to any third party with regards to not having your consent. So, of course, we'll make sure you're fully aware of the recommendation and you give us confirmation to proceed. Talks a little bit about how we process your information. Please do have a read of this in your own time. And how we collect your information. Of course, we do that through the fact-finding process. If your information, when it's disclosed to us, we need to talk about that as well. So how we record it and store the information. We're a digital business. We don't work on paper anymore. So we really make sure that everything is secure as possible. And when it comes to, transferring and sharing information, we only do that with third parties, as I mentioned, when it comes to an application with your consent. So when it comes to the end of the privacy notice, it talks about security. Once again, we keep that at the foremost of our business. We want to make sure that everything is as secure as can be. And we want to make sure that you've got the relevant detail here as well with regards to ourselves. In regards to the future, if you do want to contact us and ask for further information on your case, we'll be quite happy to provide that to yourself as well. So I'm going to stop that share. That is our initial disclosure document, and it is followed by our customer privacy notice. So the next step within the sales process will be to ensure the client understands that, tell them to keep it. It's an important document, and for future reference, they can utilize it to come back to you for contact details and information discussed in that initial presentation. So we're now going to go on to collecting the information for the customer, and we will do that through a fact find. Now, a fact find, of course, is all about the individual, starting with the name, personal details, whether that could be the address, how long they've been at the address, any previous addresses, coming into things like income, employment, salaries, and of course, they then go on to commitments, so existing commitments, so you can look to assess that affordability with disposable income, with the lender's affordability calculators, or alternatively, establish a budget for your customer's protection recommendation. Now, within the fact find, of course, it's all about establishing a need for the client. We can't arrange cover for insurance or alternatively make a recommendation for a mortgage that isn't relevant to the customer's needs. So how we would, I suppose, establish the need is through asking questions, and probably open questions to the client. So within your fact-finding process, I'd be asking questions around whether they have considered a fixed product, maybe a 2, 3, 5 year, 10-year, what their plans are for the future by means of staying within this property and owning a home. Is it a quick fix? Is it a stepping stone property, or is it a long-term move and forever home? When it comes to insurances, it's of course important to cover all areas, which is life insurance, critical illness, and income protection. So you need to ask, in the event of death, how would you pay your mortgage for your family? Or how would your partner be able to pay that mortgage on their own? Alternatively, as good as it is to arrange mortgage protection, sometimes you need something over and above because you can't eat bricks. So in the event of death, how would your income be replaced? How long could your family get by and survive without your salary coming in? Same with critical illnesses, but of course with a critical illness, you do potentially have the ability to get back to work. That could be within a 6-month period. It might be in a 6-year period. Could be longer, and you may not get back. So, Mr. Client, how would you survive financially if you were diagnosed with the likes of cancer and you couldn't work for the next 5+ years? Wait for the answer. How would you pay your mortgage if you were diagnosed with a critical illness? And the last one, of course, income protection. So with income protection, it's all about an accident, sickness, disability. It could be something that puts you out of work short-term or even long-term. There's a difference with that plan, of course, in comparable to critical illness that pays a lump sum. Income protection pays a monthly amount, giving a benefit that pays out from a deferment period. So whether someone is employed and has an employer sick pay, for example, 6 months, an income protection policy can provide additional income through a benefit through the plan beyond that employer sick pay. So if they were off for 12 months, they could claim an additional 6 months within the policy. Now, of course, it's asking the clients by means of your expenditure, looking at your budget and kind of looking at when you take on the new mortgage, your related costs, your related insurances, and also lifestyle, how much you're going to need if you're unable to work for the next 2-3 years. Could you get by, or how long could you get by? Have you got savings in place as well? So just a few examples of questions you can ask there around mortgages, around life insurance, critical illness, and income protection. And again, it'll give you the ability to establish that need. So at the end of the fact find, of course, that's the end of the initial appointment with your customer. You're going to course, go away and put together a recommendation for them. So of course you want to book a follow-up appointment. So the follow-up appointment has been booked. We end the first appointment, and then the role play then will come into the follow-up appointment where we're now going to discuss the recommendation. So before I get into that, I'm just going to quickly jump onto our sourcing system, and I am going to share screen with you guys. If you could just bear with me. Okay. So I'm going to start with a mortgage recommendation. And we're going to do this on a purchase for £500,000 for a loan of £250,000. We'll do it over 25 years. We'll do the client as Mr. Mickey Mouse. He can be a first-time buyer. We'll add his partner, but you can guess the name. Minnie Mouse. Again, first-time buyer. We'll put the property details as England for the purpose that we want to ensure that the products coming up are relevant to where the property will be, which is in England, of course. And then we'll look at the style of products. So we're going to go with a 5-year fixed, which I'm going to filter of 55 to 65 months. And then going to source that mortgage based on that purchase for the first-time buyer on the numbers. Now, the reason I'm doing this for the role play is to generate an illustration, because that's what we're going to recommend to the customer. So we just hover over here. We can see there's a number of different products available, Santander, Metro, Barclays. I'm going to do it on the true cost. So I'm just going to quickly make an amendment that changes it from a rate order to a most cost-effective order over that 5-year period. And you can see that at the top, Barclays, I've got a Premier account product. Nationwide, I've got a Helping Hand product. And you know what? We'll go with the Nationwide deal on the basis that they're not a Premier account customer. So I'm going to generate an illustration. I'm going to add the fee to the loan. I'm going to put my fee on there, £500 on application, and I'm going to generate the illustration. Don't click that. Right. So you should be able to see a mortgage illustration. Now you can see initially that it's for the clients. So within the role play, it's a matter of running through the mortgage illustration to cover off the areas. I suppose similar to the initial disclosure document, reading this so the clients have a full understanding of all areas. And if they have any questions, you can get them answered for them. So I'll go into the second appointment. Before I start, I'm going to double check, has there been any changes with Mickey and Minnie since my initial appointment? Because of course, if there has, maybe lost the job, maybe come into some money, maybe decided not to buy an house anymore, whatever it may be, we need to know about that. So there's been no changes. So I'm going to say, great news. I've got a recommendation for your first mortgage, first time buyer purchase, and the mortgage is with Nationwide. So this is the mortgage illustration tailored for yourselves. It was done on the 30th of the 3rd, 2023, and as mentioned, the recommendations with Nationwide. Now, it's got our details to show that we recommended this for you. There's a little bit of detail here about the procuration fee I mentioned in my initial disclosure, our first appointment, how we get paid from the lender. And if you come down to the second page, it talks about the main features of the loan. So this is a product especially for first-time buyers. It's called a Helping Hand product. It's a 5-year fixed deal with a $999 product fee, and it includes some cash back as well as I suppose a bit of an incentive, shall we say. Now the loan is granted at $250,000, subject to underwriting, of course. Plus there's a product fee of $999 to obtain the interest rate that's going to be available that I'm going to come on to in a second. Now, that $999 I've added to the loan. If you do prefer to pay it up front, you can. But for the minute, I've added it, so that'll reflect within the monthly cost. Now, the duration of the loan, done for 25 years. We discussed budget earlier. And of course, when it comes to your monthly payments, we want to make sure that's affordable. That works around that. Now, it's a capital repayment mortgage, meaning you're paying interest and capital off the mortgage over a period fixed for 5 years. The total amount repaid is 502,671.20. And this means you will pay back £2 for every £1 borrowed, which is kind of nice maths, to be honest. Now, the value of the property we're putting at 500,000. Of course, it's subject to valuation by the lender. And with this product, it's at a maximum of 60% of the property value. So, of course, you're currently looking for 250. So, if for any reason there was a down valuation, of course, you're going to want to know about that because you're purchasing it. But by means of this product, it has got a little bit of leeway by means of meeting the criteria if there's down valuation. Now, we're going to go on to the interest rate, of course. That's what reflects with the payments. So for the 5-year fixed, it's a 4.04% over 60 months. The annual percentage rate of charge, APRC, is the total cost of the loan expressed as an annual percentage, and that is at 6.2%. But as you can see here, the interest rate on a fixed rate is at 4.04%. And that follows by the standard variable rate, currently at 7.49 with Nationwide. That will likely change moving forward. But what we do as a brokerage firm for you, we contact you out 6 to 7 months prior to this deal ending. So we can look to obtain you a new product and have a further review to see what your plans are moving forward. So that standard variable is extremely likely you would revert to that. We would look to do a remortgage. It's potentially a new lender, or it may be that it's a product transfer with Nationwide. You're looking for similar terms, if not the same. Now, there is a product fee as mentioned of £999. Also, we charge £500 on application for the processing of this and the administration works. And this APRC, is calculated using assumptions. And now, of course, they're using the standard variable rate. So it gives an example if the interest rate rose to 10.99%, the APRC could increase to 8.2%. What I would say with that is don't take it to heart. It's just an estimate. What's important is that the interest rate is 4.04%, which reflects monthly payments, as you can see here, over 60 months of 1,329 and 16 pence. Okay, so additional obligations. The borrower must comply with the following obligations in order to benefit from the lending conditions. Building insurance, that's the big one. Of course, it's a legal obligation to ensure you have that. We can help with that. We've got a home insurance hub, and that'll give you the ability to get the right cover in place that's tailored against this property. So we'll be in touch down the line to make sure that's ready for exchange of contracts. Now, because it's a 5-year product, there is an early repayment charge with this mortgage. That is based upon 5% year 1, 4, 3.5, 2.5, and 1.5 throughout the 5-year period, year on year. So please look at that, because if you've got any understanding that you may want to leave within that term of 5 years, then there will be a charge implied against the debts. So we can discuss that. Of course, the maximum charge they can see by leaving in year 1 is at 12,549.95. Few flexible features with the product. Portability. You may have the ability, subject to underwriting, to take the mortgage to another property if you decide to move home. You can overpay as well, up to 10% of the original loan amount over a 12-month period. And underpayments, it says Nationwide will allow monthly payments to be reduced up to the value of any credit balance. So, of course, if you have overpaid, there's potential that you can underpay in the future. You do get a £500 cashback, first-time buyer incentive. That'll come at completion or just post-completion. And also you get a free valuation, which ensures that the property is at $500,000 for the security of the mortgage, as we've discussed. You have 7 days after you've been given a binding mortgage offer to reflect before committing yourselves into taking out the loan. We've previously mentioned about complaints. You can go over to Primus Mortgage Network in the unlikely event that will be the case. And then also, if you come down, there's also some further detail with regards to the payment history over the next 5 years is what's really important, where it'll tell you where your balance on this right-hand column here will be coming down throughout the 5-year fixed period. So we expect the loan to be at about 219,000 come the end of the 60-month, due to that being a fixed product. And there's no risk, of course, with a fixed product of rates increasing and you're paying off less capital throughout that period. So hopefully that sounds great for you. I'm going to stop the share. So there's your mortgage illustration. And next steps for us are to proceed to an electronic application. you've provided your relevant documentation by means of your pay slips and your bank statements. So what we need to do now is move forward with a decision in principle and a full mortgage application to secure the 4.04% product. Are you happy to do that, Mr. Client? Thank you. So just finally, we need to discuss protection. So protection products are, as mentioned in my initial disclosure, really important. And they give you financial security, especially for you as a first-time buyer, to ensure that when taking on a debt of £250,000 each other, you have security. And also against your incomes, if your income was to stop, you've got ability to repay that mortgage as well. So I'm going to launch our sourcing platform for the protection. I'm going to do the Mickey Mouse. Okay. 1990, absolutely. Right, we've established there's a need to protect the debt for both of you for death and critical illness. And you mentioned you get sufficient income protection through your employer. So on this occasion, we're not going to address the fact that you require any income protection, but we will pick that up at a later date. So I'm just going to put in your personal details. Mickey Mouse is an accountant. Didn't work. We will get there. And then, of course, we're going to add Minnie. Same date of birth. Let's make it easy. And she's going to be 6, 9. And then we're going to make her work in the world of admin. Not there, we're not. There we are. Admin office. And again, she's also on 50,000 for each other. So I'm going to save the clients. And the purpose of doing this is within the role play, we're going to present our illustration and key feature document. So firstly, I'm going to generate the illustration. So prior to going back to the second appointment, I would have put together a recommendation tailored for life and critical illness for 250,000, including TPD, and on a decreasing basis because they've got a repayment mortgage. As good as that is, you can't eat bricks. So I'm going to give them a year's salary over and above each. I'm going to do this to retirement. We'll say it's 68. And again, we'll do some life and critical illness cover. So I'm going to put indexation on this so it benefits from the effects of inflation. Save. Finally, I'm going to do the same for Minnie. £50,000 critical illness, disability, and again, effects of inflation. I'm going to add that on. So if I click quote, I should be able to generate an illustration based on life and critical illness cover, which is mortgage protection and personal protection. Okay. So I can click alternatives. I can pick my provider, my best recommendation. I'm going to come right down and I'm going to give them this enhanced children's critical illness cover, not children, sorry, adults without children, shall we say. And I'm going to open. I can see I have the key feature document here. So that's one to open. I'm going to come back to. And it's going to come back and open my illustration, which you should be able to now see. And this is where I would commence the role play recommendation for my customer for the protection. So this is the recommendation put together for yourselves, Mickey and Minnie. It's arranged by myself and your basic details are here. So we'll just double check them to make sure they're okay. Both non-smokers, male and female, 1990, and they've got your names right. Now, the cover is a multi-policy. It's covering, firstly, mortgage protection on the top line. This is for life and critical illness cover. It covers the mortgage debt, 250,000 over 25 years. And it ensures that in the event of either's death, on a joint life first death basis, the mortgage will be paid off. For me, this is a priority. You're taking on such a large debt. You mentioned you didn't have any savings to fall back on. You just got your employer sick pay. And of course, with critical illness diagnosis, it could be something that hampers you much more long-term. Now, as good as it is to pay off the mortgage debt, I believe you're going to need some financial stability over and above to meet your other commitments, such as your bills and also lifestyle. So I've done a single policy for Mickey, and I've done a single policy also for Minnie. Both for a year's worth of salary. We can take a multiple of your salary, but for affordability reasons, I know your budget was around £200 a month maximum. So when we look at the three policies, the mortgage protection is 133.17. This one's 24.77, and then also 24.77, which brings a total premium of 182.71, which includes a planned discount per policy of £1. You will also see there's an enhanced critical illness cover and disability, total permanent disability added into the plans. It means they're more comprehensive. It'll give you payouts for more conditions and the ability to claim if you diagnose with a disability that's affecting your own occupation as well. So again, that fits budget as discussed in our first appointment. You do get some additional features of health and wellbeing services with AIG. I'll send you some information on that. But just in short, you get GP appointments 24/7 through a virtual system. You can get some health checks, specialist nutritional consultations, fitness programs. You can also get things like second medical opinion through Best Doctors, and I suppose personalized mental health support, which is big at the moment, of course, which is great for people who are struggling with mental health or need, of course, people to speak to. Now, the next page is really just a little bit more in depth about that initial recommendation. So you can see that the covers are here. And as we run through the detail, it's got your personal details. The important thing to look at here is the sum assureds to make sure we're happy with the level of cover. I believe this is right for you. And also, if we come onto this page, we can see that the initial policy is a decreasing plan. That falls at a rate of 8%. So as long as your mortgage is below that, it'll ensure that you're in credit with regards to your cover against the debt of the mortgage. The other policies are index linked. They're increasing plans. So in the event of inflation increasing, you'll get an annual letter from AIG to let you know that the 50,000 value each you have will increase in line with inflation to give you benefit, as it's there to cover expenditure and the cost of living moving forward. And also, I haven't included children's critical illness cover. Of course, you mentioned no dependents as of yet, but by means of the term of the policies, they run to age 68 on your family protection because that was your anticipated retirement age. So a little bit about the premiums again at the back, and also about how we get paid. We get paid a commission from the provider, and next steps really for us are to move to an electronic application for you. Now, before we do that, we're going to run through the key features, but just before we go into that, I want to tell you a little bit about what happens next. So we do that electronic application, which will ask questions such as your height, weight, health, occupation, lifestyle, pastimes, and financial requirements. Now, with that information, there could be different outcomes. This recommendation here is a quotation. The outcomes that you may have are an acceptance. That could be standard rates. They may well come back and say you've got non-standard rates, meaning that they've increased the premium, but they still accepted you. You may get a decline if they're unhappy with your circumstances. They could postpone the cover, meaning they can't give it you right now, maybe because you've got pending investigations going on. Or alternatively, they may go for a doctor's report to look into your medical information that you're disclosing because they may have slight concerns or they want to look at an overview of that condition. And the final one would be a nurse screening. So they may ask you to do a nurse screening, likely with a third-party company like Medicals Direct, to come and do things like blood pressure, height and weight, etc., to make sure you're fit and healthy to be able to be acknowledged and accepted for the covers. Now, once we get that acceptance, we'll discuss commencement. And at commencement, because you have life insurance, we'll talk about putting your life insurance into a trust. It just makes sure the policies pay in the most tax efficient way to the right people, so they get in the right hands. Now, we're not tax advisors. If you do need tax advice, I'd fully recommend you speak to an accountant, alternatively a tax specialist. But by means of a trust, it kind of ring fences and mitigates your liability for inheritance tax and ensures you can nominate a trustee to make sure the money gets to your beneficiary, which would take beneficial ownership should, God forbid, both of you pass away. But of course, in the event of each other passing away individually, it's likely you would want each other to be the person receiving the proceeds. So just the final bit now of the role play is the key feature document. Now, we're not going to run through this word for word. We're going to use a system called Arctic. So that is the aim of the policy. What is the aim of the policy? The aim of the policy is to give you cash lump sum in the event of diagnosis of a critical illness within the key features, or alternatively, death or terminal illness. So Arctic, risk. There's a risk involved. The risk involved with regards to this policy is that if you're not open and honest with regards to your information, as previously mentioned, then there's a chance they might not pay out. So we need to make sure we tell them everything necessary from a medical perspective to be able to obtain the cover. Now, Arctic again, ARC, commitment. You've got a commitment to pay the monthly premiums as discussed in the illustration, which is 182.71. Without paying them premiums and maintaining them premiums, the cover will cancel, leaving you with no protection. So that's really important. Again, Arctic, ARC, T, taxation. The policies pay out free of income tax. Other taxes may well occur, but I'm not a tax advisor. We wouldn't go into detail with that. We mentioned inheritance tax with regards to the trust. We could potentially mitigate that for you. But just to let you know, the free of income tax. Arctic, I, illnesses. This key feature document will talk about the cover, the benefits, and of course, the critical illness cover conditions within the plan. As mentioned in the illustration, it's an enhanced policy. So it covers a number of different conditions, including the main three, cancer, stroke, and heart attack. And they also include additional payments within your policy for less advanced. So you can see here, 25% of the sum assured or 25,000, whichever is the lowest, for less severity payouts. That's I, illnesses. So again, Arctic. So the last two we're coming to claims and cancellation. So in the event of a claim, you will go direct to the provider AIG. The detail will be in the back of the booklet for you here. And of course, you can again do this in email, phone or writing. And by means of making claims on the policy, God forbid you need to, by the way, if you do need to, do not hesitate to contact myself, and I'd love to support with that process for you to make sure you get your payout. Because of course, that's what it's here to do at the end of the day. And finally, the last C, Arctic, has got a double C on it. So C is cancellation. Now, there's no contractual commitment with these policies. So if you do decide you don't need the policy anymore, you can cancel the cover. Now, if you pay any premiums within the first 30 days and decide to cancel the cover within that 30-day period, I suppose we could call it a reflection period, you'll receive them premiums back. Moving forward, if you do feel you may have a need to cancel the policies, please give us a call first. We'll discuss that. Make sure you're doing the right thing. But by means of cancelling beyond that, any premiums paid will not be refunded because, of course, you've had the protection in place. So there's your key feature documentation. Again, we don't read it word for word to a customer. What we do is we cover Arctic, ARCTICC, and we discuss it and just go through the booklet on the role play. The final step is to get a yes from the customer. Is that sound okay for Mr. Customer? And what the next steps are for the client. So initially, we'll send you a demands and needs letter, which maps out the advice and the discussions today that we've had around your mortgage and your protection needs. The suitability letter will cover the mortgage. The demands and needs letter will cover the protection. And then we'll proceed to electronic applications for your mortgage and protection as well. And we'll come back with an update and give you, hopefully, the green light that everything's there and ready to go. Does that sound okay for you, Mr. Client? Fantastic. Any further questions? All good. And that is the end of the role play. Thank you for watching. Hope that helps. And any questions, come to me direct and I'll more than happily help you out with that. Good luck.